Joining us now is Dan Clifton, head of policy research at Strategas Research Partners. Dan, it's great to have you. I'm going to kind of flip this on its head and start with one of the interesting market takeaways that is buried in your analysis, which is that it might drive people to look at U.S. reopening stocks, right? So we're going to see movement out of, some of the more sensitive parts of the market towards ones that are perceived to be a bit more of a haven.
Yeah, I thought your first guest talking about the Fed trade-off of inflation and slower growth was an interesting analysis. You saw it in the Fed minutes. And so there's just a lot of geopolitical concerns now building into an inflation and slower growth story and compounding that. And one way to invest around that is to be in the reopening stocks. These are stocks that are benefiting from Omicron beginning to fade. They haven't really done much over the last 6 to 8 months. Those are travel stocks, sports stocks, anything related to services over goods. And so that's one place where we see our clients beginning to hide. This has been going on for about 2 weeks. But Kelly, there are other places to think about as well as you start thinking about this greater geopolitical consequence.
Sure.
Defense stocks, which did not have a good year, are catching a bid. Because let's think about the policy. Congress is debating a new budget, and it looks like the defense budget is probably going to get even more than the $25 billion increase that was being negotiated last year. That number may come out closer to about 30%. So you're looking at about a 6 to 7% increase in the defense budget. That's going to happen regardless of whether Russia invades Ukraine. But the U.S. is beginning to build up its military resources, knowing that there are greater geopolitical challenges in front of us.
Sure. And so that one could be not so much the very near term, but even kind of a beneficiary in the next year or two. You mentioned the reopening stocks. What about the rest of the market, Dan?
Yeah. So, I look at this and I say that there's this very unknown. Nobody really knows how this is going to play out. We could talk about the probabilities and options of what's going to happen. But if you saw tanks crossing over into Ukraine in the next couple of days, that's a risk-off movement. That means that yields start to come in a little bit after a dramatic rise in yields, and you'll start to see the dollar catch the bid. I thought the dollar would weaken this year, but this would delay that because people are going to look for a flight to safety. I think you're seeing that in gold prices today as well. We're also probably going to wind up having an executive order on crypto next week from President Biden. So that also helps gold. So unrelated to this, but still another factor that gets layered on top of it. What's very interesting to us is how the sanctions will work, Kelly. The U.S. is clearly going to put export controls in place, denying Russia from sensitive technologies. This was a playbook that President Trump used with China. You'll now see that extrapolated out to Russia. So semiconductors and artificial intelligence, anything that the Russian military can use. So there is a negative feedback effect there on tech if that is going to happen. And then additionally, if you look at what's happening on what the main driver of this debate is, it's energy.
Yeah.
And so the Nord Stream 2 pipeline will likely be sanctioned. Now, Germany may be resistant to those sanctions, but the U.S. can actually deny dollar transactions for any company that is involved in the Nord Stream 2 pipeline if there is not coordination between the U.S. and Germany. That is a very big event. That's not removing Russia off the SWIFT transaction. That's an even bigger move. This is just denying dollar transactions. It is a very big deal if the U.S. used it and would affect companies that are involved in the Nord Stream 2 pipeline. And so what you see here is energy catching a bid. Energy stocks continue to go up. We are redirecting our LNG tankers out of Asia into Europe to try and get as much energy into Europe as a hedge if there is going to be some sort of attack.